Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a senior manager here at Schwab, and this is Getting Started with Thinkorswim. You know, I think all of us who have placed a stock trade before can think back on that very first time. We know that that was an intimidating experience to plan and place that very first stock trade. So today we're going to be walking through the steps of planning and placing a stock trade using the tools available on the Thinkorswim desktop platform. We're going to be looking at several different ways to plan that trade. We're going to be looking at different ways to enter the orders. Lots to cover, but before we can get to any of that, let me first of all say hello to everybody who's already chatting out there in YouTube. Hello there, Joe and Austin, Eva. Who else is here? John, Kevin, everybody else. Thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. If you are here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, you're just enjoying the recording of the presentation, well, have fun with that, but also be aware that you're invited to join us in the live discussion. If you'd like to be here, this is a Wednesday webcast series, and you can find it live at 2 Eastern time. That's when we kick things off. We'd love to have you here. And also, I want to let you know that my very good friend Kevin Horner is going to be hanging out in chats with the live stream audience. He's going to be addressing any questions that I can't get to during the natural flow of the presentation. As long as they're not too far off topic, Kevin's going to pick up the slack there for me. So thanks for having my back there, Kevin. And also, make sure that you're following Kevin and me on X. Doesn't cost anything to do that. It's the best place to connect with your favorite presenters in between these live streams. So you can find Kevin on X at Kevin Horner CS. You can find me there at Cameron May CS. But let's get into this. Of course, the first thing that we need to do is to consider the risks associated with trading. Risks are real. These disclosures are important, so bear them in mind. The information here is for general informational purposes only. It should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as sole means of investment research. A stop-loss order will not guarantee an execution at or near the activation price, and investing involves risks, including the loss of principal. All right, so with that said, let's set an agenda for the day. I have quite a bit that I want to accomplish because I do want to take some of that pressure off this process of finding, planning, and placing a stock trade for the first time. So we're going to be using the tools on Thinkorswim desktop trading software platform, first of all, to walk through how a trader might look for, let's say a would-be trader at this point if it's your first time, but how they might look for or find stocks to trade. Next, we'll talk about how a trader might make a plan for trading those stocks. When are we going to get in? When are we going to get out using the tools on Thinkorswim? And we're going to connect that to how do we enter the orders to put that plan into practice. So we're actually going to walk through several different stock trade scenarios, starting with some pretty basic ones, and then just moving on to get a little bit more complex. Should be a great discussion. Let's go right to it. Let me go to the Thinkorswim desktop platform. If you haven't downloaded this just yet, just be aware this can be downloaded free of charge from within your Schwab online account. Just go to the Trade tab and look for the keyword Thinkorswim. You click on that and look for a big blue button. It'll just guide you through the process of downloading this software. And then you just log into the software using your Schwab username and password, same login credentials, right? So S&P has been pretty cooperative for those that have been owning and holding and trading stocks for a long time now. A little bit of a pullback today. We'll see if we can get back on the right course for the bulls. But let's go, let's start sort of with the first step. How might a trader find a stock that they consider to be quote unquote tradable or a good trade candidate? Well, to help accomplish that, we may use a tool called the Stock Hacker found under the Scan tab on Thinkorswim. So let's go to that Stock Hacker. And this is basically, it's a search engine. It's for searching for stocks that exhibit specific characteristics that the trader has defined for themselves as important for their approach to trading. And that's going to fluctuate. Those characteristics for a stock are going to fluctuate from one trader to the next. I'm going to give some examples today, but you'll see there are huge menus of other potential characteristics. So feel free to explore and to customize, to tailor this to your own preferred approach. But by default, we have 3 potential menus here of characteristics. And over to the right, we can enter specific criteria for those characteristics. So let's sort of put ourselves in the minds of a trader who's planning and placing their very first trade. And they're thinking, well, how about I just start with, what size of a company do I want to trade? Is it going to be a small cap, less than a $2 billion company? Is it going to be a mid cap, maybe between $2 and $10 billion? Is it going to be just, am I going to restrict myself to those large cap companies over $10 billion? So maybe this novice trader is thinking, well, let's sort of split the difference. How about we go for mid cap stocks? If you're not familiar with market capitalization, it just takes the price per share on stocks, multiplies it by the number of shares to determine the size of the company. So if we have a company with 1 million shares and they're priced at $100 per share, that's a $100 million company, right? So in this menu, the default stock menu in our search engine, I'm going to select as our first item, let's go to market cap, and then you'll notice it says $M. That implies that we're going to be looking for market capitalization by millions of dollars. So if we select that as our criteria, now we can enter specific metrics for that criteria. And let's set our minimum at 2,000. That would be 2,000 million market capitalization, or in other words, a $2 billion minimum size for the company that we're looking for. And then let's crank that all the way up to, let's say, 10,000 million or 10 billion on the top end. Now, there are 1,833 mid-cap companies according to that definition right now. So we're already narrowing the potential field. Now we can go back over and just sort of explore down through here for other potential criteria in this default menu. Let's say that our trader is interested in maybe among these mid-cap stocks, there are going to be some that are kind of quiet. Maybe to our trader, they might think that's a little bit boring. Maybe they're looking for excitement, some stocks with some additional volatility. Well, one measure of potential volatility is something known as the beta. Beta just measures how volatile a stock is relative to the S&P 500. If it's just the same, if it typically exhibits the same levels of volatility, we'd say that it has kind of a one-to-one relationship with the S&P 500, and it would have a beta score of 1. If it's more volatile, it's going to have a score above 1. If it's less volatile, it's going to have a score less than 1. So let's maybe set our minimum beta requirement here at 1. Let's say we're looking for at least average volatility in these mid-cap stocks, and maybe crank that up to twice as volatile. So a beta score between 1 and 2. And there are going to be, out of the thousands of stocks out there, there are actually 4,800 stocks that are somewhere between average volatility and twice as volatile as benchmarked against the S&P 500. Now, a third criteria, how about we're just looking for the price of the stock. Some traders prefer low price stocks. Traders prefer high price stocks. Let's say that our trader is maybe not really going terribly low, maybe in the interests of liquidity, who knows? But let's go for, on Thinkorswim, one term you might want to acquaint yourself with is the mark. That means that's an abbreviation for the current market price of the security at hand. So let's choose the mark, or the market price. And how about we set a minimum for our example today at $30? And how about we go for a maximum? Let's say our trader doesn't have tremendously deep pockets, and maybe stocks above $300 is just outside their grasp, which is a fact for plenty of people out there. And there are how many? 2,600 companies that meet that criteria. So there's going to be some overlap among each of these three. Now we could already just say, good enough, let's scan. If that's adequate for our hypothetical trader out there, we click scan, and it's going to load up a bunch of stocks. But notice there are still 430 companies that are mid-cap companies with an above average beta or volatility that are priced between $30 and $300 right now. So let's see if we can whittle that down a little bit more. But we've run out of menu over here. That's okay. We can add more filters. So I'm going to click on Add Filter, and it's going to give me a choice. I could add more of these default stock filters. We could look for options. We're not going to do that today. We could look for something called fundamentals. So what are fundamentals? Well, that's the company behind the stock. For some traders, they like to confirm, first of all, that the company health appears to be strong. That can be defined in a number of ways, but how about for today, we look for something like, let's make sure this company is at least profitable. Let's see if its earnings have been strong. Earnings per share over TTM, which is trailing 12 months. How about we say that we want at least $5 of earnings? If we have $30 stocks or $300 stocks, let's say we just want a minimum of at least $5 that have been earned over the last 12 months in earnings or profits. So we're not going to be dealing with unprofitable companies. And if we were to scan now, we're going to whittle that down further. Only 110 of those 430 have achieved earnings of at least $5. Now we're getting somewhere. Greg says, does this scan work only for standard market hours? Will it also scan pre and post market hours? You can run it in the pre and post, Greg, so it's sort of an element, yes. But whether we trade in pre or post market hours is up to the trader and the way the trade is entered. I'm going to be entering orders, by the way, just because you raised a great question there, Greg. These are going to sort of be standard market trading hours orders that we're going to be entering today, just because I'm assuming we're starting with the basics for this discussion. All right, now let's, still 110. Let's narrow that field just a little bit more. Let's say that our trader is maybe looking for decent price performance on the stock. Some stocks are beaten up, even in strong market conditions. Others are excelling in these strong market conditions that we've been having. And with the S&P up there close to all-time highs, how about we just say our trader also wants to see stocks that are trading upward? Maybe their preference is for bullish trends. Well, that would require a technical analysis filter, also known as a study filter, a technical study. So I'm going to add a study here. And one of the studies that I'm going to choose from, and you can see that there are tons of them, let's look for a price performance study. And we're going to go to near highs, or we could also go for near lows if we were looking for maybe bearish examples or downward examples. Let's go for near highs. And by default, the system's going to load up. Okay, Cameron, are you looking for stocks with a current price that's within 3% of the 252 period? What is that? That means 252 periods is typically days, right over here by default. 252 days is about how many trading days you get in a calendar year. So that's what it's doing. It's saying, hey, Cameron, how about we look for something, those stocks that are trading within 3% of their 12-month or yearly highs. Sounds good. I'm not even going to customize this. These are customizable. You can see that plus or minus here. We could change the high to a low. We could change from days to weeks or hours. But let's just run our scan now, and we go from 110, we whittle it right on down to 7. So we're going to use these 7 to structure some trade concepts. And I think what we'll do, let's start with OSI here. Now, I actually ran this scan a couple of hours ago in preparation for this webcast, and there are a few stocks that have dropped off the list. I would suspect it has something to do with the Fed announcement that just came out in the last 10 minutes since the launch of this webcast. I don't know how the markets have reacted. We haven't had a chance to look. Ranjit says you're confused about study and patterns and other things. Okay, I have a suggestion for you there, Ranjit, because we are going to be doing some basic chart analysis. And I want to do that because not everybody's an expert, especially in an audience looking for help with just getting their first trade placed. Not everybody's an expert at charting, but I do have a good starting point for those that want to learn, okay? But how about we use OSIS, see what the Fed announcement did to it. OSIS, trading up near those 12-month highs. You can see that. Here we are right now. There are those 12-month highs. And let's say that our trader has noticed that recently, just in the last week, the price has broken up above previous highs, and maybe they think that's a sign that we're going to go higher. So they think, okay, well, this stock meets all of my criteria that we've just entered in our scan. We know that because it showed up in the scan results. And the chart looks strong, according to that trader's definition. So maybe they're ready to buy the stock. One that I just want to start with, let's buy a stock. Let's also practice selling a stock. And then we're going to set up different ways that a trader might buy and sell shares of stock. But you'll notice this is quite a basic outlook on charting, right? One line one broken resistance. Is it adequate for a potential trade scenario? Certainly could be. It's not a guarantee that it's going to succeed. But yeah, for some traders, it's just as straightforward as looking for price floors and price ceilings, and bouncing off a floor or breaking through a ceiling might signal that it's time to get into a stock. Now, to go to Ranjit's question, and for anyone who's really new to charting, this isn't explicitly a charting webcast series. It's more of a tool demonstration. Let me give you a link here. I actually recorded a series of 8 lessons to help someone go from knowing nothing about charting to getting a pretty good grasp on how a lot of people might accomplish it. So here's that link to my 8 lessons. Let me paste it in the live stream window. I'll also try to remember to add this to the description for the video. So for those that are watching on the recording, go down and click to see if I remembered. I'll just say, yeah, I'll remember. I'll put it in the description. All right, there we go. But let's say that our new trader here is ready to buy this stock, OSIS. You might say, Cameron, when are they going to sell it? Let's go one step at a time. Let's just buy something. How do we buy shares of stock on Thinkorswim? Well, we can go to our trade tab. By the way, I see a little bit of intrusion here. There we go. Just had to move that out of the way. I'm going to go to the trade tab here. Make sure that we have the correct symbol. OSIS is, we need to type it again, just type it in again. And then to buy shares of stock, believe it or not, all we need to do is go down here to the ask price. When we're buying and selling stock, when we buy, we generally pay the ask price. When we sell, we generally receive the bid price. Just think of it this way. If you wanted to buy anything from somebody, you say, hey, how much you asking for that? And if you agree to the price, you pay them the ask price. If you want to sell something to somebody, you might hold up that thing. Let's say I have I don't know, who knows what I'm trying to sell. I have a phone. Hey, everybody, who will give me the highest bid for this phone? Then you sell to the highest bidder. Pay the ask price, receive the highest bid price. So I'm going to click on the ask price, and just doing that creates a buy order down here. Now, this buy order might need to be tailored to suit that trader's preferences. I've set my preferences in Thinkorswim to bring up an order to buy 10 shares. By default, it's typically 100 shares. So if we need to change that quantity, you could either click the plus and minus sign, or probably easier is to just type in the number of shares we want. Let's say we actually wanted 50. Actually, oops. Did I change my recent? Let me expand this out. I must have, because that actually defaulted to 100 shares, and that's pretty typical. Well, I don't want 500 though. Let's say we just want 50. Let's delete that last zero. Buying the stock, and I'm going to submit this. Let me just read the whole thing for you. So since some of you are going to be new to this, okay, we're buying a stock. Plus 50 means buying 50 shares. OSIS is the security. Price can be, we can set a price requirement, or we can just say, you know what, I'm going to click here and choose something called the market order. Now, this is changing let me move that out of the way for just a moment. The order type here, we have a menu to choose from. Market, limit, stop. I'm going to talk about those 3 today, because those are probably the 3 most commonly used. I don't even have to say probably. I'm very confident in saying those are the 3 most commonly used types of orders for new traders. So we're going to choose the market. Market just means I'm willing to pay whatever the market price is for these shares. I just want the shares. And right now they're at 196.06. By the time my order gets entered, reaches the front of the line to get executed, the price may certainly have changed, but I'm just willing to pay whatever that price is at that moment to get into the shares. Now we can also change what's called the time in force. I'll do that in a later order, but that just means, do I want this order to get filled either today or just cancel it, or am I okay waiting for the order to fill on a subsequent day? But that's it. I'm going to submit this order. Let me click confirm and send, and as I do this, it's going to bring up an order confirmation dialog box. So this is my last chance. I actually haven't committed to the trade yet, but once I click send, then I have. But this just allows me to confirm this is actually what I want to do. Okay, I'm buying 50 shares of OSIS. That's going to cost around $9,800, depending on how much it fills for at the market price. And I'm going to send that order off. Now, sometimes with some types of orders, there can be commissions. With stocks, there aren't. But I'm going to send this off. Yeah, Robert says paper money. If you're following along at home, but you're on your paper money version of Thinkorswim, you won't see that study filter that I added to look for the stocks that were within 3% of their 12-month highs. That's a good point, Robert. Yeah, only available on the live platform. Yep. But I'm going to send this order off. And I just bought 196, bought 50 shares, $196.21. So those shares are now, if I go to the monitor tab, I can see that position here. All right, so that is one plan for buying stock. Let's bring up another stock from our scan results. Let's go here and see what's going on with, let's say GATX. So here's GATX, which is kind of similar to OSIS. The stock has been going up for the last 12 months. However, it reached recent highs, and it's kind of pulled back from those. And for some traders, that might cause them to hesitate a bit. Because when stocks pull back from the same point, they can go down some distance. So a trader might be waiting here and saying, well, if we get back up above this level, and that looks like that's around 168. So if we get up here maybe to 169 or 170, maybe the trader's okay with getting in, because then they think at that point maybe we're taking off. But until then, not interested. So in this case, the trader might choose to use, instead of just a market order, buy right now, they may use what's called a buy stop order, which means, hey, this stock is now going in the right direction. This is the way that I think about it. It doesn't explicitly mean this. But hey, the stock is going in the right direction. Stop the bus. I want to get on. I want to buy now. Once it's gone up above 169, 170, let's say if it gets up to 169, we're ready to go. That would be above the 12-month high of 168.29. So I'm going to go to the trade tab. I'm going to make sure that we have the right symbol here again. And I'm going to click on our ask price again. That brings up another buy order. Let's say, this is a $164 stock. Let's peel this one back down to 50 bucks or 50 shares. But instead of choosing market, which would mean buy in right now, I'm going to choose the stop order, which again means if the price rises up to that level stop, I want to get in. Now, it may get to 169 today. It's not likely to, though. You probably noticed that on the chart. It might take a few days to get there if it's going to. So we may need to change our time in force here to good till canceled. And on this stop, let's put in the price at which we want to essentially get on the stock bus, 169. I know you can't see the whole thing, but I just typed in 169 there. But let's make that a good till canceled order. And it will allow us to see what we've done here when we click on confirm and send again. Leon says, can you take a brief peek at the scan parameters again? Yeah, sure. Let me bring that up. There you go. And they'll also be on the recording for this webcast if you need to go back and watch me build that scan again. But let's go back to our charts. By the way, there's our GATX right there. Not to our charts, to our trade tab where we're placing this trade. And I'm going to click confirm and send. Now, some of you, we have to be aware though, if we put in a good till canceled buy order, what that means is this order is going to remain into effect for up to 6 months. If it doesn't buy today, it'll wait for tomorrow. If it doesn't buy tomorrow, it'll wait for the next day. The problem with that is we could get several, we could get 2 or 3 weeks, a month down the line, and we've sort of moved on in life. We forgot about GATX. It's not even on our radar anymore. And then all of a sudden, pop, off goes a $7,000, what would this be? $8,500 order that we weren't thinking about anymore. So for some traders, they might want to put an expiration date before 6 months on this kind of an order. And that can be done using this little gear over here to the right. I'm going to click on that little gear, and it allows me to put on a condition here. And under conditions, see, this is our order up here. But an additional condition, cancel this thing. And we can just set it. Let's say if we don't get our order filled in the next couple of weeks, then I'm going to allow it officially to drop off my radar. It'll just cancel. We can set a specific time of day if we want to get that nitpicky. or we can just set the day. There we go. Let's just save that, click confirm and send. So we're buying these 50 shares. If they get up above 169, good till canceled, to be canceled on the 14th of February. Not a commission on this trade, but here's an important note. With stop orders, there's no guarantee that the execution price, so if this happens to go up to 169, we're not guaranteed that we'll pay exactly 169. If it, let's say it's up to 168 and then there's a strong announcement and it gaps up to 170, that will trigger the order to fill, but maybe we pay 170 or even higher. So there's no guarantee the execution price will be equal to or near the activation price, which in this case is the 169, but I'm gonna send that order off. So off it goes. I probably should have set this to expire sooner than that because this is just a demonstration. I don't really need it in this account. Anyway, so that's a second trade scenario. Let's go to Eva. I'm not going to go. No, I don't believe so, Eva. I'd have to explore that. That's a good question. Anyway, but let's look at another trade scenario. Let's look at a trader who's not waiting for the stock to go up a certain distance, but maybe to come down a certain distance. Let's look at something like MAIN. So with MAIN, here's Main Street Capital. It's been working its way up in sort of stair-stepping jump starts. It'll run up and then pull back and run up and then pull back and run up and pull back and so on. And let's say that our trader has found this using their scan and they notice that recently it has run up and they're interested in buying, but maybe they think it's a little bit top heavy and they'd rather buy if it happens to pull back a bit. So our last time we ran up, we gave back about half of the distance. Notice we ran up from here to there, and it came back about half that distance. So we run up again, and the trader's waiting. Maybe it'll come back down, give me a few dollars or a couple dollars back. Right now it's trading at $60.50. Let's just say that our trader would prefer to buy when it's down here at about 59. That's the limit they want to pay, not a penny more than 59. Well, let's go put in a limit buy order. So let's go to our trade tab. This is a less expensive stock, so as we click on the ask price, maybe the trader's okay with buying 100 shares. So let's leave that at 100. But let's come over here and stay with the default limit order. A limit order just means the trader has determined the maximum they want to pay for the shares, that's their limit. And in this case, we decided 59 bucks was that limit. So I'm going to enter $59. How about we change this to a good till cancel order as well, because it's, again, unlikely. Could get down to $59 today, but unlikely. But let's have this one, let's have this one canceled a little bit sooner. Let's say if we don't get it in the next few days. How about we say by February, let's give it the weekend, 3rd. We're going to click Save and click Confirm and Send. Putting in an order to buy 100 shares at $59 if we can get there. This is a good till canceled order, and it will be canceled on February 3rd at 12:27 local time. I'm here in the mountains of Utah, so that's when this would be canceled for me. So that gives us a maximum that we'd be spending here at $5,900. No commission on this trade either, and I'm going to send that order off. All right, so we've gone through a few different ways. Just buying at the market price, buying using a buy stop order, or buying using a buy limit order. Buy stop to buy if we're waiting for price to go up some distance, a buy limit if we're waiting for price to go down some distance. But what if we want to sell? Well, let's sell something. Here's the way a sell order can be placed. It can be placed in a number of ways, but when we already own the shares, we can actually just go to our monitor tab. This is where we monitor the progress of our existing positions. And we can right-click on the order. A nice thing about doing it this way is it gets the shares right, it gets the stock right. We know that we're a long way toward entering the order as we actually intend. So I'm going to go to OSIS here that we just bought, and I'm going to sell it. Let's assume maybe we've made some good profits, or maybe we're just trying to cut our losses. But in any event, the trader has decided to get out of this trade. I'm just going to right-click here And from the resulting menu, I'm going to create a closing or an exit order in order to sell. Let's sell those 50 shares of OSIS. And by default, it's going to suggest a limit. I'm not going to do a limit. In this case, just like we used a market order to get in, I'm going to use a market order to get out. I'm going to sell those 50 shares of OSIS at the market price, leaving this as a day order. Just get me out right now. So if I click confirm and send, I still get that confirmation box, selling 50 shares of OSIS at the market price, not a commission on this trade, but again, with market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. So if we're just ready to sell, this is one way that a trader can just sell. But at other times, though, notice we just sold it. What did we buy it for? We just sold it for $196.35. We could go to our account statement. But whatever. It's on the recording. We can. It doesn't matter. It's a few pennies. Anyway, but there are plenty of times when a trader actually, at the time they're buying, they already have a plan in place for when they intend to sell. And why wait around? This is kind of the old way to do it. We'd have a plan in our mind to sell at a certain profit level or sell at a certain loss level. And we just wait for that event to happen. We check on the account every day. And if the stock happens to be, oh no, it's down too far, I'm going to sell. Oh great, it's up high enough, I'm going to sell. Well, that process can be largely automated. So let me use an example here. Another stock from that watch list, let's say we're looking at COOP. So here's COOP, another stock that's been running up. It's one of those mid-cap stocks, higher volatility, trading at least $30 per share. You can see it's up there at 104.75. And it's another one that's broken through a recent price ceiling. You can see when it pushed through that price ceiling around that 101 level, 102 actually, that acted as a pretty decent price floor for about a week. And then the stock started to move again. So maybe our trader's thinking, ooh, this maybe looks like a good opportunity to buy. So we're going to buy some shares. But maybe our trader also notices if we slip back down below 102, maybe that doesn't look so good for the stock anymore. Their idea here is that 102 should be support. If we were to get back down to, let's say, 100, maybe it's not looking so good for bullishness on that stock anymore. So how about we buy some shares right now, but to conceptually protect the trade to the downside, try to limit the loss potential on a trade, let's put in a stop order. That's what it's called. We already used a buy stop. We're going to be using a sell stop order down at 100. Stop this bus. It's going the wrong direction. I want off. So let's go to the trade tab. There's Mr. Cooper Group, COOP. But to place the trade, I'm going to enter the buy order and the stop at the same time. Here's a quick way to do that. There are a number of different ways that this same thing might be accomplished. But I'm going to go to the ask price again. And instead of just clicking on it, which would bring up a buy order, I'm going to go up here and right click on the ask price and put in a custom buy order with a sell stop order attached. So as I select with stop, watch what that does. It's going to bring up our same buy order, but it's also going to include the option, the opportunity to have a sell order to try to minimize that downside risk. So let's tailor the quantity again, $105 per share. Let's say maybe this time, just picking random quantities. It's going to vary from one trade to the next, how many shares they want. Let's say we wanted to do 40 shares in this case. We just want to make sure that the quantities match. We can also have them match automatically by clicking on this broken chain link. That's what that dramatic looking icon is. If it's a solid chain link, it means that quantities are going to automatically update to be the same. But here we can choose whether we want to put in a limit, a buy stop. I'm just going to put in a market order to buy 40 shares of Mr. Cooper Group. Leave that a day order. But our stop order, we decided, hey, if this slips down below $100, let's put in 100 down here. Stop the bleeding. I want off the bus. Let's make sure that's a good till canceled order. We want that protection in place beyond the end of trading today, beyond the end of trading next week. We want that to continue. So now we can click confirm and send. Going to buy 40 shares of Coop at the market, just willing to pay the market price. And again, with market orders, those prices can change quickly in fast market conditions, resulting in execution prices that can be different from quotes displayed at order entry. But then we're going to have this sell order to sell if the price happens to fall down to 100. Now, just like with a buy stop order, we're not guaranteed to sell at exactly this price. That's just what we call the trigger or the activation price. That activates the order to fire off an order, go, get me out of this thing. And then our order is filled at whatever the next market price is when we get to the front of the line, which could be different than our trigger price. So with stop orders, there's no guarantee that the execution price will be equal to or near the activation price. But at least we've drawn that line in the sand. Rapidly moving stock price might stomp on our just like a bully stomping on the sand line that we drew, but hey, we did our best. But let's send the order. And there we go. Just bought those shares at 104.91. So that's if a trader is buying shares. They know that they want to buy, but they also know where they want to sell and take their losses. Well, what if they want a plan to take losses, but also hopefully to harvest gains? Let's look at one more. Let's go to our charts. There's one, I think I fancied this chart up a little bit. Let me see, was it ABG? Yep. Here's what I noticed with ABG. If you'll forgive me, I've drawn lines all over this thing. These are not automatically applied. They're lines that I drew. But what I noticed is that the stock tended to move in what we call price channels. In this case, it was from 205 up to about 230. So about a $25 range there. Here it was from 220 up to about 245, about a $25 range there. Here we broke up and went up another $25 to a peak here. In any case, it seems like this has a sort of rhythm. When it's stuck within a channel, that channel tends to be about $25. So let's say that our trader sees that we recently broke up above about 265, and maybe they think this is ready to move now up to 290. So the idea is, hey, I'm going to buy right now while it's at 274, and if it goes up to 290, maybe I make 16 bucks. Well, it might go up to 290. When might the trader reverse course on the logic of this trade? Well, if it happens to slip back down into the previous channel, maybe now it's going to go all the way down to 240. Ouch, don't want to participate in that. So here's a two-sided plan. One to take profits up at an example of 290. The other one, let's say we get down here at 264. We get back down into that range. Trey, do you like this in my Picasso there? Yeah, I literally just drew a channel and then I copied it and pasted it all over the chart. Anyway, but you get the idea here. So a trader can have a number of motivations for entering into a trade. Maybe they just want to buy the stock and add some diversification to the portfolio and they're done. Well, that might just be a market order to buy. Maybe they have a stock they want to buy and they want to hold as long as it keeps going higher. But if it starts to fall, then they're out. Well, that would be buy with a stop. Or they may choose to buy and they're just in it for the short term. Just want to make a nice little swing trade up to a profit target. If they can get that, they'll take their gains. If it doesn't work out, take the losses. So let's go put this trade into practice. And we've already learned all of the necessary trade order types. We just need to make sure that we put them in the correct order. So here, let's make sure that we're trading the right stock, ABG, Asbury Automotive. And I'm going to right-click on our ask price. And instead of choosing a buy order or putting in a custom buy order with a stop, in this case, I'm going to use with OCO bracket. I'm going to be putting in two orders, but I only want one of those to ultimately get filled. If we get to our price target, great, sell, take the profits, cancel the stop. If we happen to fall down to the stop, ouch, take the losses, cancel that target sell order. One order cancels the other order, OCO. So I'm going to choose with OCO bracket, and that brings up an order to buy, by default, 100 shares, and to sell those shares at an as yet to be defined profit target, or sell those shares at an as yet to be defined stop level. But first of all, we need to customize the number of shares. Let's say we only wanted 20 shares here. Let's make sure these orders are linked, and then look at that. As I move on with my order, the quantities match now. Let's make this a market order. So we're saying I'm willing to pay whatever it takes to get in, but our target is going to be our limit price. In this case, if I put in, let's say, a price of $2.90, that was where we wanted to take profits. What we're saying with a limit order is, hey, I want to sell those shares that I just bought, but not for a penny less than $2.90. That's my limit. I'm going to make that limit order good till canceled so it doesn't expire at the end of the day, because it's probably not going to $2.90 in the next hour and 20 minutes. Could, but it's unlikely. I say hour and 20 minutes because that's how long it is till the market's closed today. And then our stop, we're going to put that down at 264. And let's make sure that's good till cancel order. But stop again here just means stop the bleeding. I want off this bus. And by the way, as I'm getting off, cancel my order to try to take profits, because I'm not getting profits. So let's click confirm and send. Buying 20 shares of ABG at the market. And with market orders, the prices can change quickly to fast market conditions, just like we've discussed. We're going to sell those shares at a limit of $2.90 if we can get there. It's certainly not guaranteed. Or we're going to sell those shares at a stop of 264. And again, just with our other stop orders, there's no guarantee that the execution price will be equal to or near the activation price. But this is sort of a more complete, what we'd call a swing trade plan for a stock trade. It's a stock that we've noticed has sort of been swinging up and down. We just want to catch the next swing up and try to take a quick profit there. May happen, may not, but we'll find out. I'm going to click send. No commission on this trade. But with that, and with those 20 shares that we just bought for $275.35, we've accomplished what I set out to do today. When I started today, I wanted to start and look at things through the eyes of someone who's never placed a trade before, a stock trade on Thinkorswim. I wanted to talk through how we might find stocks using the tools on Thinkorswim, then how we might make a plan for trading those stocks using the tools on Thinkorswim, and then how we might put that plan into practice by using the correct sequence of orders on Thinkorswim. So we did it. This is what we do on Wednesdays. I just provide an introduction to the different tools that are available on Thinkorswim. Sometimes it's about charting, sometimes it's about searching, sometimes it gets a little bit fancier. But I hope that you would put it in your calendar to join me each week. I'm going to let you go, but just as I do, remember there are other resources available outside of these webcasts. For example, make sure that you are following Kevin Horner and me on X. Thanks, Kevin, for helping out in the chats, by the way. But you can find Kevin on X at Kevin Horner CS. You can find me there at Cameron May CS. Now, another thing that you want that you certainly want to do, if you haven't done it yet, is make sure that you're subscribed to our Trader Talks channel on YouTube. This is where we house our playlist for previously delivered webcasts. So for the person that asked earlier, is this webcast going to be recorded? Yup. And it's going to be posted to our playlist here on YouTube. This is where you find all of our previous webcasts. And they're organized by topic, by series. So that makes them really easy to navigate. You can also join the live streams right here. It doesn't cost you anything to follow us on X. It doesn't cost anything to subscribe to YouTube. So go down and click on the subscribe button right now if you haven't already. But with that accomplished, I want to say thank you to everybody who's already given the thumbs up out there in the live audience. 26 people have already clicked that thumbs up out of the, what am I seeing, 99 people watching right now. Thanks for watching. Thanks for giving me the thumbs up, the like. A like to a presenter is like a pat on the back. It's like applause. And it also boosts that presenter's webcast in the YouTube algorithm. So it helps our videos find a wider audience, just help more people understand things like how to place trades on Thinkorswim. So thanks for doing that for us. One more time, thanks again, Kevin. Definitely appreciate your help. Thanks for all your great questions. I will see you next Wednesday for another discussion of getting started with Thinkorswim, but I do have other webcasts in between now and then, so I'd like to see you in one of my other webcasts as well. But I'll also look for you on X. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.